Good morning, traders. Good morning, traders. Today we want to discuss how to combine Elliott Wave and Fibonacci butterfly pattern. How to combine Elliott Wave and Fibonacci butterfly pattern. All right. So you may be wondering, is this about butterfly? It's not about the insect butterfly. We are talking here about a Fibonacci pattern, a specific Fibonacci pattern that is called the butterfly pattern. All right. So we want to talk about how we can combine the Elliott wave principle, the Elliott wave analysis with the Fibonacci a butterfly pattern. There are other Fibonacci pattern. We have the Gartley pattern, the bat pattern, the butterfly pattern, and the crab pattern. All right. So those are the Fibonacci patterns. All right. So if you want to know more about Fibonacci pattern trading, go and subscribe to Day Pro Traders YouTube channel or YouTube search videos relating to Fibonacci pattern by Day Pro Traders YouTube channel. All right, so the discussion about Fibonacci patterns is taking place at Day Pro Traders YouTube channel. You can also check our website www.dayprotraders.com. But today we want to combine Elliott Wave and Fibonacci pattern, in this case a butterfly pattern. All right, so looking at this chart, what we're going to do first, we're going to start counting Elliott Wave. So I will give it to you for 1 minute. All right, now I will give you a reference point, okay, where you can start labeling your waves. So I'll give it to 1 minute to look at this chart. The financial instrument that we are looking at is Texas Instrument Incorporation. Texas Instrument Incorporation. All right. And the EPIC is TXN. Okay. Tango X-ray November. This is an American stock that is listed on the Nasdaq 100. All right. So I want you to try to look at the chart. I'll zoom into it a bit and to see whether you can correctly label the first wave, the second wave, the third wave, the fourth wave, and the fifth wave. Your time is starting now. All right. I'll give it to you. 1 minute, my friend. Okay. So I'm here watching. 1 minute, my friend. I'm watching the clock, my friend. Watching the clock. All right. Have you found the first wave? Okay, now second wave, third wave, fourth wave, and the fifth wave, without violating, the Elliott wave principle. So you may say to me, Joe, who are you to tell me that my time is starting now? All right. The point we want to make is that we learn about the Elliott wave theory, which is a theory, but we want to apply the Elliott wave practically. All right. So talking about practical Elliott wave trading, Elliott wave analysis, one should start counting waves. So I'll leave it to you. You still got 5 seconds left to finish your wave count. Have you finished? Boom, time's up, my friend. Okay. So hold on to your wave count. Okay. I don't want you to think that, oh, my wave count is wrong. Keep it as it is. And this is usually taking place among Elliott wave traders. This one will say, oh, this is the first one. This one says it's the second wave. But you do not want to violate the market pattern. This is very important. And you do not want to violate the Elliott wave principle. All right. Sometimes the wave count may be different, but decision will be almost the same. So which means this one, the wave count may be wrong, may be different from somebody else's wave count, but the decision to buy will be almost the same. So this one will say, yes, I would love to buy. Now I believe, yes, we should sell it now. All right. Though the wave count may not be the same. So if I start counting my wave, you may say, Joe, your wave count is wrong. And I will turn around and say to you, this is my wave count, and I'm following our guidelines. All right. So bringing on more the chart, you can, so one trick to improve your wave count is to look what has happened in the past. So you can see here, we have, a head and shoulder chart pattern. Is it a good one? I will not dwell on it. We draw a chart. Yes, it's a good one. because the right hand side shoulder is not in a declining channel. If I draw my line like this, so this is a good inverted head shoulder chart pattern. Okay, good. So you can see we have an inverted head shoulder chart pattern here. Yes or no? Okay. Is he helpful now? Will that change your wave count? Okay, now again we have another, you see the same level where we have the head. We have another head there. Where is it? Our new head is here. So personally, looking at this chart, is here, the right hand side shoulder. And I may say, this left hand side shoulder is a little bit tiny or hidden somewhere here. Will you accept that? Okay, from that observation on my chart, because I like to count wave on a monthly chart very often, all right, so here we are. So for me personally, I will call this one the first Elliott wave. Okay, let's adjust. Oops. I'll call this one my first wave. Is that the same thing you find, or you do something else? So if you count it like this, if you count the first wave, 1, 2, if you call this one, okay, let's go through this quickly, all right? If you call this one from here to here, first wave, I will say it's wrong, because the structure of this wave is not an impulsive wave. Say 1, 2, 3. I will not count this one from here all the way up here as the first wave. That will be a mistake, because the structure of the price is violating, okay, an Elliott wave principle, and a motive wave should be subdivided into 5, not 3 in this case. As you can see, 1, 2, 3. I will not call from here to here as the first wave. Okay. So the inverted and shoulder chart pattern here it is my first wave, and you may think that the second wave almost nearly come to the beginning of the first wave, but it did not. It did not. If we put a line here, you can see that it did not touch. It's a little bit above it. So let's go with that, okay? You do not have to accept my wave count, but this is my first wave. Color it into green. My second wave into red. So where is the third wave? So, but one more thing I need to say here. Another trader may say this is the second wave. It's not bad in this case. No, it's not wrong, because 1, 2, 3. Did you call this second wave? It's not bad. That's what I'm talking about. So 1, 2, 3. All right, you can say, yeah, 1, 2, 3, second wave. All right, and then you'll be calling this the third Elliott wave, and you'll be calling this section here the fourth wave. So the fourth wave also 1, 2, 3. But the reason why I will not call all this second wave is because of what is happening here. But this is what I'm saying. So somebody may say this is second wave, third wave. Somebody may say this is the third Elliott wave. And they will call this 1, 2, 3, fourth wave. And they will call this the fifth wave. Is that what you have done? Let me know in the comment section, please. All right. Okay. All right. So you see now, but I'll show you how I did mine. Okay. Feel free to disagree or to hit the computer and say, George, who are you? You don't know anything about Elliott wave. All right. So now what I've done personally, I believe, okay, that this is the second wave, just this one here, and we have a complex, okay, third Elliott wave. So, which has been subdivided into 5 Manon waves. Am I wrong? All right, let's see. You see the tail of this candle here? Are you with me? You see this candle here? Am I talking? You see this one here? That's the fourth Manon wave of the third wave. Is he overlapping the first one? No. Okay, so this is this pullback here on the monthly chart. If you go on the daily chart, you see many candles coming down. On the weekly chart, you may see few candles coming down here. So then I will call this one here the fifth Manon wave of the first wave. So my third Elliott wave, feel free to disagree, from here to here. So there may be a little bit different between my wave count and yours, but the most important thing is that we are not violating the market pattern. Okay, so first wave, second wave, third wave subdivided into 5 minor wave. All right. In fact, I believe the third minor wave of the third wave itself is also subdivided into 5 waves. But we're not going to that now. So this is my third Elliott wave. Going to color it now into orange. That has been subdivided into 5 waves. And now this is my fourth wave. So in this case, my fourth wave is subdivided into 3. A bit messy. A messy. Stay away from messy, complex fourth wave. Professional do that. Try to stay away from them. All right. 1, 2, 3. A bit messy. So people sometimes, swing traders, especially swing traders, can get cooked. All right. If you agree, may face a bit of problem if they try to trade a complex fourth wave. Best approach, because the first rule is not to lose. The second rule is not to forget the first rule. All right. So this is my fourth wave, which I usually color into pink to please the beautiful ladies. Okay, so here we are. So we have first wave, second wave. Third wave subdivided into 5 minor wave all the way up here. Fourth wave subdivided into 3, 1, 2, 3. Is that correct? Feel free to disagree with my wave count. And now this is the fifth Elliott wave. Now always remember this. Whenever you count Elliott wave, don't set it in a stone. All right, what I mean that don't think that your wave count is definitive. What I want you to do is this. Just say, with the information that I have today, this is my wave count. So what you are trying to say to yourself is that I'm willing to follow the price action if there is, a change. All right, this will save you a lot of problem. Why? Because a lot of the Elliott wave traders, Elliott wave practitioners, have an edge in the financial market. Do you know that? They are able to forecast what is likely to take place. You see here, the reason why I put this one here as my second wave is because of what has happened here. So by labeling this second wave, we know that if the second wave is just a simple normal wave, there is a high chance that the fourth wave will be a complex fourth wave, which means alternates between the second wave and the fourth Elliott wave. All right. So with those information, the Elliott wave practitioner have an edge, but there is a bit of problem. Elliott wave practitioner can become too confident, too arrogant, and sometimes they can waste a lot of money for their firm or for themselves, just being too confident. So that's why I'm saying to you, all right, whenever you count Elliott wave, just say to yourself, with the information that we have today, this is what I see. Don't get into this game that this is exact. Is definitely is going to be like that. All right. And then the next day you wake up, they probably do something else. Always be ready to buy and be ready to sell. So the area where we are using it as a guide, as a torch, in the night you use it as a torch to see, all right, what's going on, all right. But then you want to know where you are putting your feet. The light is showing you the road, but the road can be muddy, it can be some hole up and down. Like you are driving in the night, the light is on your road, but you want to see pay attention to the curvy roads, or the sign and everything else. All right. So this is what we are talking about. Gently, gently, gently. Best approach. And you will thank me in the future, all right, definitely, that what I said is true. So this is my wave count. All right. So if you put in a comment section that, George, your wave count is completely wrong, I will give you back. This is my wave count. All right. Does it make sense? So where is the Fibonacci butterfly pattern? That's a good question. So you say, George, you say that how to combine Elliott Wave and Fibonacci butterfly pattern. By the way, there was a trader at Day Pro Traders that put a comment there, said to me, George, record videos about how to combine Elliott Wave and Fibonacci pattern. Excellent question. And I say, well, the discussion will take place at 24 Elliott Wave YouTube channel because I don't want to miss, okay, the Elliott Wave and talk about Elliott Wave too much at Day Pro Traders. The discussion. So those kind of comments should be at 24 Elliott Wave, okay? So where is the butterfly Fibonacci pattern? Okay, now I'm going to remove some line and I'm going to show you now that there is a butterfly pattern here on this chart. Can you see it? So I'm going to give you again the clock Fibonacci traders. All right. So if you have been following us at Day Pro Traders, so what I will do, I will carefully, okay, what I'm going to do, I'm going to move my vertical line to help you a bit to see the session that I want you to pay attention to. So this session here, look if you can recognize, okay, a butterfly pattern. You have 30 seconds, my friend. All right. Now this is good, isn't it? So I want a bit of participation. So this is okay, educational channel. All right. Your time is starting now. 30 seconds. All right. Look at it. Can you see? Okay. So to help you a bit, we to the condition for the butterfly pattern. We want to see an impulsive move, and then a pullback. All right. And then we want to see the AB, the pullback is what we call the XA. And then a bit of rally up, that's what we call the AB. And then another pullback that we call BC. And then we have, okay, the C to D completing the pattern at point D as a delta. Your time is up now, okay? Have you seen it? So here we are, we have, you can see that if you look carefully here, the price was going up. So that's what we want. We want a price financial instrument. So that's the first condition, very important for us. So you can see if I'm referring here to the third area, the price was going up. That's the first condition. And then we have what? A pullback. That's the second condition. So that pullback, that's what we call this point here. We call it X for X-ray. This point we call it point B. Now we are waiting for the point A. Point X, point A, and it's point B. So the AB should retrace the SA up to 78% Fibonacci retracement level. So when we see that the AB retraces the SA into the 78% Fibonacci retracement level, the first Fibonacci pattern that is coming to our mind is what? The butterfly pattern. All right, it's a butterfly pattern. So here, if I apply Fibonacci, this is my XA. So, by the way, if you want to know more about the butterfly pattern and Fibonacci pattern, subscribe to Day Pro Traders channel. I recommend to traders to subscribe to all our channels. The Day Pro Trader channel, very important, okay? 24 Elliott Wave channel, very important. Tell all your friends to subscribe to those channels, all right? So you may start, okay, using advanced technical analysis. The advanced technical analysis is about applying the Elliott Wave principle and also the Fibonacci trading tactics, all right? We also talk about fractals. All these fractals, Fibonacci, all right, at dayprotrader.com, Elliott Wave technical analysis at 24 Elliott Waves, okay, YouTube channel. So by applying Fibonacci retracement to the price action from here down to this point, which we call the XA, point X, point A, we can see that the retracement AB, this is point B now, is into the zone of 78% Fibonacci retracement level of that XA. So I'm putting another line on my chart. Pay attention to that. You see, that's the 78%. Can we see? Hold on, please. One second, traders. Let's zoom into it. Oops, it's gone. I want you to see. Is it a little bit better now? Can you see 78%? 78%. I don't use 78.6%. I always use 78%. You see the number 78%. Okay, that 78% is the line above. All right, the 88% is the line above that. Okay, so 78% is this line here. You can see that the A to B stop in that zone. Yes or no? Will you agree? So we have SA. So there was a bullish trend. Then we have a pullback that we label SA. Now we have a retracement into the 78% Fibonacci retracement level of the SA. That's we call AB. Now we want the B to C. Okay, B to C can be between. Okay, so it's a range between the range of 38.2% up to 88.6% Fibonacci retracement level of AB. So this move down can go down all the way to 88.6% Fibonacci retracement level of AB. If you want, we can do that now. We can apply Fibonacci retracement to AB. All right, this is AB. So we want to see how far this move B to C has retraced, okay, the AB. So by applying Fibonacci retracement to this price action, let's see whether we have exact level. So remember, it's not 88.6% is between, between can be between 38.2% and 88.6% Fibonacci retracement level of AB. So I'm highlighting now on my chart the 88%. Can you see that? That's the line here. Let's color that line, okay, into red. Can you see that? So the AB, you see how it stopped exactly 88%, but can be between 30, can stop at 38.2%, can stop at 61.8%, can stop at 50%, all the way down to 88. I use also 88%. All right. You see how it's working all the time. Instead of using 88.6%, use 78%, use 88%. All right. Here it is. Okay. So the condition are verified for the butterfly pattern. So the butterfly pattern is developing. All right. And now we have the point D for delta. Okay. Right here. So for the butterfly pattern, you see today, by the way, people are selling now, right now. People are selling here. Why? Yeah, that's a good question. We are at the end of the fifth wave, and not only that, we have also a butterfly pattern that is completed at that point in time. So stay with me. This is about multi-talented trading. So you learn about Fibonacci pattern, you don't use it on its own, you mix it a bit. So remember, have you ever cooked something you want to cook, you miss ingredient? All right. So we are doing exactly the same thing all right, in trading, in technical analysis, in the investment. You miss the trading tools. All right. So Fibonacci, a bit of Fibonacci, okay, 5 ounces of Fibonacci, okay, 10 ounces of Elliott Wave mixed together, and then you are ready, all right, for a nice bearish party, which is taking place right now. Okay. Now, by the way, this video is not about cooking recipes. It's about Fibonacci retracement. All right, this is to make you laugh a bit. All right. So now, so we see now. So this last condition for the butterfly pattern is that the B to see this point. This is what we call B. So we have X, and we have A, B, C, D. And the D can go up to, all right, up to, all right, 1 to 7% Fibonacci extension level of SA. Normally we should say AX because of the way we draw in, all right, the way we are drawing our Fibonacci. That's it. That's correct. The way we are drawing our Fibonacci extension of SA, normally we should say Fibonacci 1 to 7% Fibonacci extension of AX, but I like to say XA because it's the same distance, but you have to apply in another way to see it up here. All right. So the point D of the butterfly pattern can be between, not exactly, but between, can stop either at 1 to 7, which is the first line that I'm drawing here, This is the 127. Can you see 127%? Fibonacci extension of which one? This move here, SA. All right. Color them in green. That's the first level. And it can continue all the way to the highest level, 161.8%. Here it is. Can you see the 161.8%? Let's zoom into it, my friend. This is about combining, okay, Fibonacci butterfly pattern and Elliott wave trading. Can you see 161.8% on my chart? Here it is, on the dot. And what is happening there? People are selling. They are taking profit. Elliott wave traders are taking profit. Fibonacci traders that were trading this pattern bit by bit are also taking profit here. This is what we call conversion point. In fact, it's the hottest conversion point for this stock now, is people are selling here. Am I saying to people to sell a stock? No. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Well, very important. So you see now, so we have used the Elliott wave principle. We count the wave, first wave, second wave. Third wave has been extended, which means it goes above, okay, all right, the 161.8% Fibonacci extension level of the first wave. So if the first wave is extended, what do we have very often? We have very often equality. So let's see whether my first wave is making sense. So either we have equality in length between the first and the fifth wave, or equality in magnitude between the first and the fifth wave. So talking about magnitude or amplitude, we are drawing it from the low of the first wave to the high of the first wave. Talking about the length, we draw the line to the price to highlight the length of the first wave. So first I'm going to use the magnitude of or the amplitude. So when I use the amplitude, my target will be at $63.95. That will be a reasonable target. You have to understand how the price went up. You see here, when you see this, the candle here tried to go near that zone. The size of this candle slowly, it came slowly to that level, 63.95. The market was acknowledging that target level, and then from there it just ran a push up. Those are Fibonacci traders. Those are Fibonacci traders that were trading this pattern. All right. So 1 to 7 was a target, which is corresponding to our forecast fifth Elliott wave using the magnitude of the first wave. So you have two groups of market participants looking at that level, 63.95, both Elliott wave traders and Fibonacci traders that were trading the butterfly pattern. So for the butterfly pattern, they know that the minimum we can achieve is 1 to 7% Fibonacci extension level of SA, corresponding to that level of $63.95. Elliott wave traders forecasting the fifth wave using the magnitude of the first wave will set the target at that point in time. So here we are. So let's now use, okay, the length of the first wave to forecast the fifth wave. So I'm going to put it like this, almost the same level. Almost the same level. But this, you can see how aggressively this candle was. Push. Those were Fibonacci traders claiming, okay, the butterfly pattern, okay, at 161.8% Fibonacci extension level of SA. Is that helpful? All right. Is it good? Now the question is it better for an Elliott wave trader to also master the Fibonacci pattern? I think it's good. So you may see the pattern and understand what is taking place. All right. So our wave count may be wrong, all right, or maybe different. All right. We are not violating the market pattern. Our wave count may be different, but the bottom line is not to lose. And by combining the Elliott wave principle and Fibonacci pattern, like butterfly pattern, we can make excellent decisions. So by going back to the gentleman, a trader that has asked the question about requesting that I start posting videos about how to combine Fibonacci pattern and the Elliott wave. This is just one example what usually takes place, I'll tell you quickly, but we will be talking about it more. If I promise something, I'll try to do it, my friend. All right, I'm not God, but I'll try to do it. Okay, all right. If I'm in a good mood, of course, guys. All right. All right. So, okay. So, what usually takes place, my friend? Okay, is that we usually see a bullish trend. Okay, a bullish trend, or because I like to talk about bullish trend because I don't get into trouble when I'm talking about bullish stocks. All right. If I talk about bearish stock, people say to me, Joel, you are telling people to sell the market. You shouldn't be doing that. And I have people, okay, very angry, and I don't want that. So I choose more, okay, bullish stocks. All right. Okay. So when we have a bullish trend like this, okay, very often we see a correction pushing the price down. But the correction is not finished yet, okay? So you will see that it goes up like this, and then people harvest down, people sell it down, like exactly like this, okay? Then after that, after you see bullish trend, a move down. I don't want to say correction, but because we can have a complex correction that can take longer periods, all right? But if you see it goes up like this and goes down like this in straight line like this, or a bit one, or sometimes you see come down like this, 1, 2, 3 down like this, yeah. After that trending first and that move down, very often we have what we call a Fibonacci pattern. So why? Because the Elliott Wave trader will come 1, 2, 3, 4, 5 waves during the trending phase. And then the first part of the correction will begin maybe 1, 2, 3 down. Okay? That 1, 2, 3 down like this, for Fibonacci traders, they are calling it SA. So they see trending first, and you are Elliott Wave trader counting trying to figure out is it going to be complex wave, how far the correction will last. You see all this move all the way here, it's a correction. All right? But if you see up and then down like this move down, that's what they call, if you have a trending fair, then this move down, it's this correction down like this. That's why the Fibonacci traders are calling XA. And from there, they start looking out for Fibonacci patterns. In fact, as you can see here, there are more to this, but I don't want to go too deeply into it. But this is what you need to remember. If you want to combine a Elliott Wave analysis and Fibonacci pattern, this is what usually takes place. Trending first, and then they move down, and then we start looking out for Fibonacci pattern, crab pattern, Gartley pattern, all right, butterfly pattern, okay, and so on, all right. So bat pattern, all right. So, but remember this. Here you can see that there was a trending move again. Price went up here. It is from here. It just went up, and then a pullback. Fibonacci pattern traders understand that trending first, correction. And now they start looking again. This is exactly what has happened here. So this orange move is a trending file. Now we see a move down. Now they are on a lookout. They see this retracement. They see it's a 78% level. The first Fibonacci pattern coming to their mind is what? Butterfly pattern. They know that the B to C will be between 38.2% and 88% Fibonacci retracement level. Possibility that the price may go up to 1 to 7 all the way to 161.8% Fibonacci extension level of this, okay, SA. This is what has happened here. So for this stock, there is a high chance that we may see a bit of pullback. So at this stage, all we can say to trader, priority to bearish signal below $70, and priority to bullish signal above. If you break above, start running away, and find a support display high, low, high, high, well, it's another story. But with the information that we have today, this is our wave count. This is the Fibonacci butterfly pattern. We are ready for any change, and we are just flowing with the price. If you have any question or suggestion or comment, my friend, all right, put it in the comment section. We like that. All right, in due course, I will record another video, okay, to answer your specific question. We are the TSTWSYS008 traders talking about how to combine Elliott Wave and Fibonacci butterfly pattern. Happy trading to you all, and speak to you soon.